Why is your money buying less and less every year? Groceries, gas, rent, it all feels more expensive. But is it just your imagination? Or something bigger? What you're feeling is inflation. And today, I'll explain what inflation really is, what causes it, and how it silently erodes your wealth, unless you know how to beat it. This is the clearest breakdown of inflation you'll ever hear. Let's start simple. Inflation is when prices of goods and services increase over time. But more importantly, it means your money loses value. If a sandwich cost $5 last year and $6 today, that's inflation. You need more dollars to buy the same thing. Now multiply that effect across your rent, car, energy bills, healthcare, and suddenly your paycheck isn't stretching like it used to. In short, inflation isn't just rising prices, it's shrinking purchasing power. So what causes inflation? There are three major drivers. Demand pull inflation. Too many people chasing too few goods. Think stimulus checks, supply shortages, everyone buying TVs during lockdown. Cost push inflation. When it costs more to produce stuff. Oil goes up. Shipping costs rise. Everything gets more expensive. Monetary inflation. When governments print too much money, more money in circulation, each dollar is worth less. In the last few years, all three happened at once. You've probably heard of the Federal Reserve, America's central bank. Their job? To keep inflation around 2% a year. When inflation spikes, they raise interest rates to cool off spending. When the economy slows, they lower rates to boost it. Raising rates makes borrowing more expensive. Mortgages, car loans, credit cards. That slows down demand, which slows down inflation. But here's the problem. If they raise rates too fast, they can crash the economy. It's a balancing act, with trillions of dollars at stake. Inflation hits different people in different ways. If you're living paycheck to paycheck, inflation is brutal. Essentials go up, but wages don't. If you're a borrower, high inflation can help you because it erodes debt. If you're a saver, inflation quietly steals from your bank account. $1,000 saved 5 years ago doesn't buy what it used to. Even with a 1% interest savings rate, inflation at 4-6% means you're losing money in real terms. That's why the wealthy don't hold cash. They own assets that rise with inflation: real estate, stocks, businesses, even collectibles. So what can you do? Invest consistently. Stocks and index funds historically outpace inflation over the long term. Own real assets. Real estate and commodities hold value better than cash. Cut bad debt, especially variable rate debt like credit cards. Increase income. Skills, side hustles, and entrepreneurship are inflation-proof strategies. Inflation isn't going away. But if you understand it, you can beat it. Inflation is invisible until it isn't. But now you know how it works, who controls it, and how to protect your future. This is Chava Capital. Subscribe for smarter money in 5 minutes or less. Let's build wealth intentionally.